Ladies and gentlemen, my name is Greg Michalowski for ForexLive.com. This is a technical look at the major currency pairs. Today's date is November 17th, 2014. We had Mario Draghi, before I get into technicals, we had Mario Draghi talking today. Pretty much pretty sobering comments. In fact, he described the outlook, the economic outlook as increasingly sobering. And his details were along those lines. Euro area growth momentum weakening over summer. So economic outlook continued to the downside. Risk economic outlook continuing to the downside. Inflation in Euro area remains very low. Insufficient progress on structural reforms. Is there any good news coming out of this? He did say that the turning point in credit growth now behind us, and he says there's a gradual return of confidence among investors. And so that was the most positive comments. But did say that the ECB is ready to act further if required, and that but there are limits as far as what the ECB could do as far as monetary policy. Nevertheless, they still have that old buying sovereign bonds, which may be something that they look down the road. And that helped to push the euro to the downside here. The market was already moving to the downside, having found resistance against the old high going back to November 4th, I should say. This high equaled that or got very close to it, and the market started to rotate to the downside. Here's where Draghi started to speak, and we saw the price continue its move further to the downside, moving away from the 08 level. Remember, the 08 level was the top of this range that we saw in trading through Friday. Until Friday, we broke above that level and then used that level as support. So once again, using the 08 level as resistance, a resistance ceiling for the euro, kept the price to the downside and forced the market through the 100-hour moving average, the 200-hour moving average, and here we sit for the last 3 or 4 hours below the 100-hour moving average. Stay below this area right here, and the bias range to the downside, we'll be looking for a break of the low areas from last week at the 123.92 level and 123.97 level, and this is the low price for the year at 123.57. So that's what we have to look for as long as the price remains below this level. If it moves above that level, we could see another short covering up toward the 08 level, and we'll be watching on alert again for the 08, really the 125 level to the 125.08 level as a resistance level on the top side. Let's take a look at the pound sterling next, and this currency pair moved up toward the 157.20 level and the 157.26 level. The 26 level is a 38.2% retracement of this move to the downside. The 20 level, if you recall, going back to the weekly chart, is you take the 2013 low, the 2014 high, and the 20 level is the 61.8% retracement level. So the market did move above that 20 level, but we spent about 4 or 5 hours trading above and below it. So it wasn't exactly racing through it. We did find resistance in that area, and the market rotated back to the downside. Now we are near this old trend line, if you will, this trend line connecting a low to a low here and lows right here before a little break there and a little break on the Friday. We went a little bit again below that line right here, but found support, and now we find support against that trend line and also against this trend line right here. So get below this area, it's more bearish, and we'll be looking down toward the low price for the year, and moving down perhaps even further down toward the 154.29 level ultimately for the pound versus US dollar. That's this low price going back to August of 2013, I guess, and that's what we have to look for. But first thing to do is get below this level. If we can't get below this level, and if you're a buyer right here, your risk would be down here. You want to look for you probably look for up here toward the 93 level, where we have resistance up here against the high, against the high. We broke through that level, and then we broke through it again on the downside. Also have this trend line coming across there at the 93 level. So that's the key level for the sterling versus US dollar. Dollar versus yen, what's the story here? The story here is GDP. GDP came out much weaker in Japan. Initially sent the dollar yen to the upside here as a weaker yen. Then the stock market started to decline in Japan, down 3% or close to 3% in trading here today. And the Pavlovian reaction is when the stock Nikkei goes down, the dollar yen goes down along with it. So in a perverse way, the yen gets stronger, and until officials started talking, the market started to think, well, maybe they're going to get rid of that sales tax, maybe they're going to add more stimulus, and we started to see the yen weaken again, and the price moving back higher above this trend line. We had a number of different points along that trend line, and we held that trend line right here. We fell below it here in the Empire Manufacturing, but we quickly recovered and moved back above it, held the support here, and now as long as the price remains above that level, which is around the the 26 level. Then the bias remains to the upside for the dollar versus yen. We'll be watching that 26 level for close support. Let's take a look at the Aussie versus US dollar. And this story is about a trend line. It's also about the 100-hour moving average. In this break below the 100-hour moving average here, the market, and we went below the 200 and the trend line, the market failed and moved higher. In today's break below the 100-hour moving average, we found support against that old trend line here. That trend line has a point here, 2 points right here, and another point, let's call it right here, of support. We did it again here, right here. So we have good support against that trend line. Keep that level in mind. Also watch the 100-hour moving average. We're back above that level. That level currently comes in at the 187.16 level, let's call it, and we're currently trading at 20, just above that level. As long as we can stay above that level, that would and get through the 50% retracement at the 87.25 level. That's this move down from the October 29th high to the November 7th low. If we can get above that 50% retracement level, that'll open up the door further upside here for the Aussie versus US dollar, and in effect make this a fail break, just like this was a fail break, and kind of this was a fail break as well. That's the Aussie versus US dollar. Take a look at the New Zealand versus US dollar, and this currency pair is about also a corrective move to the downside after making new highs. The new highs came against a trend line. The correction came down to the 50% of this move to the upside, so 50% retracement at the 78.98 level, and we saw the market rotate back to the upside. So as long as we stay above the 50% retracement, that's good news. Also watch closely this old high from Thursday's trade. That level came in at the 79.26 level. If we're able to stay above that level, you see we tried to have a ceiling there against that level here, and then moved above it in last hour's trade and staying above it in this hour's trade. So if we can stay above that level, that would be more positive for the New Zealand versus US dollar on the hourly chart. Finally, I'll take a look at the Canadian dollar. Dollar Canada. This currency pair is also about a 50% retracement level. Also about, in this case, it also includes the 100-hour moving average. Tested the 100-hour moving average and the 50% retracement at the 113.27 level. Stay below that level. Stay below it, it's more bearish, and that's what we're seeing here in the dollar versus Canada market rotating to the downside. Watch the underside of this trend line here. We've been above and below it over the last few days of trading. But if the market comes down to this level around the 112.88 level, could find some support buyers against that level. So there you have it, a look at some of the major currency pairs and a little talk about fundamentals as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.